Harendra Kumar now joining us, Managing Director at Elara Securities. Harendra, I mean, you set it up for us. You heard Sonia explain what to expect. But to your mind, what's the big one here?
Yeah, I think Reliance is not a quarter-on-quarter story. What the market is always now trying to play is now that the first leg of the strategy in terms of the digital play has played out, the next leg in terms of ARPU expansion, the demerger, and how the value unlocking plays is what is in the minds of investors. I think the market has, preempted our ARPU increase on the 5G side with respect to Bharti, Airtel, and Reliance, but I think it's some time away. So all these earnings triggers, so we can say strategy 2.0 will start playing up somewhere closer to June next year. So it's a H2 story for FY 23-24. And the sharp price rise in the stock in recognition of what is going to flow will only play up in the next calendar year or for the second half of the fiscal year. So my guess is it's not a quarter-on-quarter earnings story that needs to be watched. One is you have to see the 5G, how it is progressing in terms of customer adds, in terms of ARPU expansion. Then more news bites on the demerger. And obviously, on the new hydrogen energy space of how quickly they are going to backward integrate in their oil to chemical business. So these are large strategic initiatives. There is deep value in the company, not a quarter-on-quarter story.
Okay, all right. Hi, Harendra, morning. I wanted to ask you about ITC. That one out of nowhere, when everyone had shunned it away, maybe last Diwali as well, suddenly it's got its act together and the numbers look splendid, whether it's their core business, whether it's the smaller parts of their business. What would you do with the stock? Now we're at around 350 rupees.
Correct. So I think there is still some value in the stock. In fact, it is the best performing FMCG stock, and it is what is actually helping the FMCG index staying afloat. If you look at some rest of the players, even with respect to HUL and Nestle, Tata Consumer, United Breweries, whatever you're seeing is pressure on margin, pressure on top line. It is in fact ITC which is doing well. So three variables that worked in favor of ITC and continue to work in favor of ITC. Number one is it was a value stock when actually this rally began. So value, quote unquote, is the theme globally over the markets, and ITC after the deep underperformance at 200 rupees started his journey from there. The yield was very good. And second is then the GST taxation overhang kind of lifted with, there's no further communication from the government on that front. And at a much larger level, I think the bigger question is now whether the investors are looking at ESG as a theme to play. And given all the concerns on energy globally now, I think the way the investors are looking at ESG plays now has got moderated. So this overhang on ITC also has come off. So these tailwinds exist in the stock. The numbers seem to be supporting it, and most businesses seem to be fighting. So yes, on the FMCG side at the moment, we have ITC and Britannia and Nestle, which are the three picks vis-a-vis rest of the other ones that are there. So if you're playing at a tactical intra-sector theme, these are the three stocks that will stand out.
Okay, I guess smokers got to smoke, right? No one's going to stop smoking just because it's bad for health, perhaps. Wanted to talk a little more about Axis Bank, Harendra, because yes, the numbers are very strong. Yes, it's like multi-quarter high in terms of loan growth, etc. But the stock has also had a smooth run, right? I mean, it's gone from 600 now at 800 plus. You think a lot of the good news is in the price, or would you take a fresh position here?
Yeah, so I think prima facie if the market has to go to 20,000, it has to be the bank nifty. And the numbers are very, very encouraging for all the players. So I think the market will negotiate this quarter, take a fresh assessment and probably try to take a lift off from these numbers. And within that, which are the names that are probably going to be the outliers. So if ICICI Bank is over-owned, if you look at all the nifty positions of all fund managers and globally, so it on the total weight that they are allowed, they are significantly overweight. So the next in line now is whether you want to trade HDFC Bank or Axis Bank. I think the bets that the market is taking till now is that till the indices reallocation or realignment doesn't happen, you need to go with the second private player, which is now Axis Bank. So numbers have supported. So I think it will move now in tandem or do some catch up with ICICI Bank. So huge valuation comfort still because it's around 2 times price to book multiple. So in our view, Axis Bank will continue to trade higher. Now, one more point I would like to add here is that within that, the PSU bank index is looking to outperform the private bank index. So that is where your alpha trade setup is, which is in the bank Nifty. And if your allocations are right, you could end up outperforming the Nifty in a significant way.